Welcome to Module 1 of the Mastering Candlestick Patterns course. In this module, we'll lay the foundation by diving into the basics of candlestick charts and understanding their significance in the world of trading. What are candlestick charts? Historical significance. Candlestick charts are a powerful tool in technical analysis, offering valuable insights into the price movements of financial assets, such as stocks, commodities, or currencies. These charts have a rich history that dates back centuries to Japan, where they were initially used by rice merchants and traders in the 17th century. The development of candlestick charting techniques is credited to a Japanese rice trader named Munehisa Honma, who is often referred to as the father of candlestick charting. These charts gained popularity due to their ability to convey a wealth of information about price movements in a visually appealing manner. Components of a candlestick. Now, let's dissect a candlestick and understand its components. Candlestick charts provide a visual representation of price data for a specific time period, typically displayed in daily, weekly, or monthly intervals. Each individual candlestick represents this time frame and consists of four main components. Real body. The white part of the candlestick, often referred to as the real body, represents the price range between the opening and closing prices for that period. When the closing price is higher than the opening price, the real body is typically colored white or green, symbolizing bullishness. Conversely, if the closing price is lower than the opening price, the real body is colored black or red, indicating bearishness. Upper shadow, wick, the thin line extending vertically above the real body represents the highest price reached during the time frame. It signifies the intraday high or peak price. Lower shadow, wick, the thin line extending vertically below the real body represents the lowest price reached during the time frame, indicating the intraday low or trough price. Candlestick length, the length of the entire candlestick, including the real body and shadows, provides insights into the overall price volatility during that specific period. Longer candlesticks suggest greater price volatility, while shorter ones imply relatively stable price movements. Candlestick patterns, formed by the arrangement of multiple candlesticks in succession, offer valuable signals to traders and analysts. These patterns can indicate potential trend reversals, continuation of trends, or indecision in the market. Popular candlestick patterns include the doji, a sign of market indecision, bullish engulfing, a potential reversal pattern, and bearish harami, another reversal pattern. Traders often use these patterns in conjunction with other technical indicators and analysis techniques to make informed decisions about buying, selling, or holding assets. Open, the price at which the market opened during the time period. Close, the price at which the market closed during the time period. High, the highest price reached during the time period. Low, the lowest price reached during the time period. Comparison with other chart types. Candlestick charts offer distinct advantages over other types of charts, such as line charts and bar charts. Advantages of candlestick charts. Candlestick charts provide a wealth of information that might be missed in other chart types. The body of the candlestick indicates the price range between the open and close, while the wicks, or shadows, show the price range between the high and low. As you can see, candlestick chart with different candle shapes. Long body, short body and wick components, long wicks and short wicks. We will discuss about these shapes in coming lessons. The use of color in candlestick charts, such as green for bullish candles and red for bearish candles, adds an extra layer of visual information that helps traders quickly assess market sentiment. Now you have a solid understanding of what candlestick charts are and why they're so important in the realm of trading. In the next lesson, we'll delve deeper into the psychology behind candlestick patterns and explore how human emotions shape market movements. Before you move on to the next lesson, take a moment to review the key takeaways from this lesson. Familiarize yourself with the components of a candlestick and understand the advantages candlestick charts offer over other chart types. Thank you for joining me in this lesson. Keep learning, stay curious, and remember, practice makes perfect.